Beyond Meat's wild ride continues, and today's session was one for the books. After opening strong and rocketing to as high as $7.69 per share early in the day, the stock completely reversed, giving back most of its gains and finishing down 4 cents at $3.58, a modest 1.1% decline. But those numbers only tell part of the story. The bigger takeaway is that today's chart perfectly captures what happens when a short squeeze enters its most volatile phase, that moment when emotion, leverage, and exhaustion all collide. This has been an incredible run. Over the past few days, Beyond Meat has gone from a sub-$1 stock that everyone had written off to one of the most talked-about tickers in the market. It surged over 146% on Tuesday, added another 25% in the after-hours, and came into today's session with all eyes watching. The stock doubled again in the pre-market and went vertical after the bell, hitting that $7.69 level before fading hard into the afternoon. So what's really going on here? Was there any fresh news driving this kind of move? The short answer is no. There hasn't been a major company announcement or a new business development since the Walmart distribution update earlier in the week. That deal, which expanded Beyond Meat's presence into more than 2,000 Walmart stores, was an early catalyst that gave the rally its first spark. But what we're seeing now has less to do with Walmart and far more to do with positioning, sentiment, and the mechanics of a short squeeze running hot. To understand today's wild action, you need to think about how squeezes evolve. The first stage is disbelief. A beaten-down stock suddenly starts to climb, and short sellers assume it's just noise. The second stage is panic, when the move accelerates and shorts begin covering positions to stop the bleeding. The third stage is what we saw today, euphoria and exhaustion colliding in real time. Traders pile in expecting another doubling, shorts scramble early, but then buyers run out of fresh fuel and the move collapses under its own weight. Beyond Meat's float remains heavily shorted, estimates range between 60 and 80% of available shares. That means more than half the stock's tradable supply is borrowed by people betting it will go down. When you get a move like we saw early today, that short interest becomes a powder keg. Every uptick forces shorts to buy to cover, and every round of covering drives prices higher. It's a reflexive loop: price up, more covering, price up again. But once the shorts that were most at risk have closed out, there's less forced buying to support the price. That's when you start to see the big intraday reversals. There's also a technical layer to all of this. Options trading around Beyond Meat exploded this week. Call volumes reached record levels, with traders loading up on short-dated contracts, many expiring this Friday. That kind of speculative options activity can supercharge a rally when it's going up, because market makers have to hedge by buying shares, but it can also accelerate the decline once those contracts lose value and the hedges unwind. That's part of why today's reversal was so sharp. Now, to be clear, this doesn't mean the short squeeze is over. What it means is that we're moving into a more complex stage, one where momentum battles exhaustion, and where every headline, tweet, or large order can swing the stock in either direction. It's still entirely possible that Beyond Meat sees another leg higher in the coming days, especially if it opens tomorrow above today's closing range and holds volume. But it's also possible that today marked the short-term peak of this initial squeeze wave. Let's talk about what to watch next. First, focus on the open. If Beyond Meat holds above $3.50 to $4 tomorrow morning and attracts strong volume early, that would indicate the bulls are still in control. If it gaps up again into the $4 or $5 range, it could trigger another round of short covering from those who added new positions today on the fade. But if it opens weak, say below $3.50, that would signal momentum is waning and traders are beginning to take profits more aggressively. Second, pay attention to volume. Yesterday's rally was accompanied by massive trading volume, and today's early surge was even higher before tapering off in the afternoon. Sustained high volume means new participants are still entering the trade. A sharp drop in volume could mean the crowd is thinning out, and without constant inflows, these kinds of moves don't last long. Third, watch the social sentiment. Beyond Meat has been trending across trading forums, X, formerly Twitter, Reddit, and StockTwits for 3 straight days. The memes, the screenshots, the excitement, all of that plays a real role in driving participation. If the conversation continues tonight and tomorrow, if new traders are still posting about potential round 2 or day for targets, then the rally can continue longer than fundamentals would suggest. But if the chatter fades or shifts to another ticker, that's usually a warning that the energy is about to leave the trade. Fourth, keep an eye on the company itself. So far, Beyond Meat has stayed quiet, not issuing any statements about the volatility. If management decides to comment, even with a simple acknowledgement of the unusual trading activity that could influence sentiment. Sometimes, when companies remind investors about financial realities or dilution risks, it cools off speculation fast. Other times, a statement can act as a confidence boost if worded carefully. Either way, it's something to watch. From a trading standpoint, today's reversal offers a few lessons. The first is that momentum works until it doesn't. You can't fight the trend when a squeeze is building, but you also can't assume it will keep climbing indefinitely. Beyond Meat's early spike to 769 was exhilarating, but the reversal that followed was brutal for anyone who chased it late. The key is timing and discipline. If you were in early from sub $1 or even around $1.50, this kind of volatility is an opportunity to lock in partial gains while keeping some exposure in case the squeeze reignites. If you're thinking about entering now, you have to recognize that the risk-reward profile is completely different. The easy part of the move is over. Now you're trading in the chop zone, where big intraday swings are the norm. Another thing worth noting is that the rally's sustainability will depend on whether new catalysts appear. The Walmart expansion was a nice headline, but for Beyond Meat to hold higher levels long-term, it needs either improved fundamentals or another external trigger. Maybe a new product launch, a strategic partnership, or at least an update that suggests demand is stabilizing. Without that, the current move risks becoming just another chapter in the meme stock playbook, spectacular in the short term, but fleeting once the excitement fades. That said, it's hard not to be impressed by how far the stock has come in such a short time. Beyond Meat has captured the imagination of traders again. It's the underdog comeback story, a company many had left for dead suddenly roaring back to life through sheer market energy. That kind of narrative can be powerful, even if it's not underpinned by fundamentals. In markets, perception can move mountains, at least temporarily. So as we look ahead, the question isn't whether Beyond Meat deserve to rally, it's how much further this sentiment can stretch before reality steps back in. The stock is still heavily shorted, which means volatility isn't going away anytime soon. We could see another surge if volume floods back in tomorrow. We could also see consolidation as traders digest the week's gains. Either scenario is possible, and that's why risk management matters more than ever right now. If you're holding Beyond Meat, think in stages. Ask yourself, what's my profit target? What's my stop loss? Am I reacting to emotion, or following a plan? Because in trades like this, the difference between doubling your money and losing half of it often comes down to discipline. To sum it up, today's session marks a turning point. The rally has proven it can reach extraordinary heights, but it's also shown how quickly those gains can evaporate. Beyond Meat's story isn't over, far from it, but it's moving into a new phase, one where every tick higher will face stronger resistance and every drop lower will test the resolve of the bulls. The short squeeze is real. The momentum is still alive. But the easy part is done. From here on out, it's about whether this community-driven run can evolve into something bigger, or whether we're witnessing the peak of another speculative frenzy. For now, the takeaway is clear. Beyond Meat is still the hottest ticket on the market, but it's no longer a one-way street. The volatility is here to stay. If you're trading it, stay alert, stay flexible, and above all, respect the risk. Because rallies like this can change direction faster than you can refresh the chart. We'll see tomorrow if the bulls still have gas in the tank, or if the shorts finally get some breathing room. Either way, Beyond Meat has already made its mark as one of the most explosive and unpredictable stories of the year.